What's up, guys? It's Tyler coming at you with another video. So today we're going to be covering some classic setups. We're actually getting into the tool now, so it's not just theory. We're going to cover some quick theory and then get into the tool. So classic setup number one, here we go. So classic setup number one is where we break a previous daily high or low, right? It has to have the edge, if you will, right? It's got to have something proving that we could take that. So we know that the bullish one is the one that we'd like because it has 132 out of 250 instead of 118. Now it's not always going to be the case, but that's just for the strongest setup. So we break that previous daily high. We pull back, again, sweet spot somewhere between 40 and 60%. Now, the key here in classic setup number one is we have to leave a 60% probability or better, or 70 really is what we'd like. 60 is just rule of thumb, right? So you can see we went up there. We did not tap the 65%. It pulls back. We find a setup in there, small break of structure on the 1 minute, however you'd like to do it. Then it extends higher. You just have to make sure that that extension has 65, 70% probability. Now, and then right, your setup would just look like that. Your classic setup number two is a similar move, right? So right here, we break the high and we get a heavy retracement. Here is where we break the high, classic setup number two, and give almost no retracement. So if we only pull back to 0.1 and extend again, we could possibly see classic setup number two. Now, what is classic setup number two? It's where we break the high, but see zero retracement. There's not a retracement, or it just pulls back to the 0.1. We have to leave, again, 40 to 60% probability untouched since breaking the high. So it breaks the high, no retracement, but extends higher. We begin looking for a short in this 40 to 60 external number range. And again, so we trade up here, 1.3, 45%, and what do we see? Break a structure, pulls back. That's where we would get short, right in here. We'd go short after the break in structure. You could even just go short based on there, put your stop above this high, and let it run again to 40 to 60% probability. And that would be your classic setup there. So classic setup number three is a continuation of classic setup number one. So it's, we get a high, we get a heavy retracement, we extend, but we still have some good probability above that extension, right? So right here, still a 45% probability. We retrace, right? Taking the trade around 60% probability. We want to see a break in structure there, and then target the new liquidity above the high only if the new liquidity is between 40 and 60%. So give me a second. I'm going to go ahead and pull up my trading view now. That way we could go ahead and cover some setups. So I want to make sure it fits. I got to resize the screen. Let's see here. I think I could just fit to screen. Let me just go ahead and do it. Sorry, the screen going from PowerPoint to here is not compatible. I want to make sure you guys can see what pairs we're on and everything. See the times. Okay. So this is about as big as I'm going to be able to get the screen. Okay, so let's go ahead and go into the probability tool and talk about some setups. So currently, this is the situation that we're in NASDAQ. You can see I already have some numbers and some data up there, but the previous daily high was broken. So you can see previous daily high got breached. Now what did we trade up to? 60% probabilities right here. So which setup is that looking like? Well, without going back to it, you could just rewind the video. Right now, it looks like classic setup number two, because we've punched through the high. We didn't punch through the high till right here, and we gave zero retracement. So what should we be looking for? We should be looking for a break in structure. Get it right here. Then you can start looking to go short. Where do you want to go short at? Between 60 and 40% probability. So you could go there at the 1.2, put your stop at the 1.3, which would be like right here. I don't have it pulled up. And then your probability, again, your target is on the internal numbers. This would be your first target, 60%. This would be your second target, 44%. So this right here is classic setup number two. It ran the high, gave no retracement, traded up to 60%, broke structure, gave a setup short, and we can start looking short, targeting again, 60 to 40% on the internal numbers. So classic setup number 2, going from external to internal. Now, let's see here. We're seeing a similar setup here. Let's see if we can find a previous day that gave us classic setup number 1. That truly is the easiest setup. Let's see here. Let's see, a classic day with a continuation. Yeah, I haven't been retracing that much as of late. This would be a classic setup number 1 right here. So you can see they break that previous daily high. Let's see if we can get the numbers on it. Let's wait for the tool to pull up. Okay. So you can see it breaches the previous daily high, and we still have 63% probability above the high. So where would we go long? We'd want to go long somewhere between 60 and 40. So somewhere really between here and here. Now we don't know what those other numbers are. We're just going to assume for right now. So we know we want to start looking for a setup in that range. So, and we know that this, in the event that we do get long, is going to be the target because we know that there's still probable data above the current daily high. So again, we don't want to catch a falling knife. We're not just going to buy it. We have to wait for actual structure. So we could check out the 1 minute. That's a structure break. So if you get a retracement, you could look to take something. This one dumps through. Finally hits our 20 to or 40 to 60, and we start trading around. Runs that low again. See right here where it ran that low, it could never break structure. Just ran up into this balanced price range and then turned around. Price trades around, we get back into that zone, and now we are breaking structure. That's just a wick, nothing closed yet. Boom, we get a close. So now we can start looking for longs up until here. So if we were just going to take a blind position, we go stop here, TP here. Now the stop, really I would just like to go 0.6, 0.7. So right here it's going to pull up our 0.6 and 0.7, and we can look at that data and see where our stop is safe at. So you can see right here, if we're already at the 0.7, that's not bad. If we're at the 0.6, that's still pretty all right data, but it is pretty close. But it would get you a 3 to 1. So that's kind of on your risk. I would ended up leaving it there most likely if I had to chase with here. Now, if I could get an entry in here, I have no problem, you know, with that smaller stop. But so it trades in, gets close, would have stopped us out there. We get another break in structure. So again, if we're just doing a blind buy, at this point, I'm not going to want to use this stop as much. I'd rather be looking in here. The price trades back. I'll probably just play it at 10x, yeah. And price starts running. It's slow, back and forth. You can see we come back to entry even here. We trade around for a while. It gets toward the close, and then we hit that TP. Again, it's the next level. Let me go back out. This is our classic setup number 1 because we had probability above the high. It broke the previous daily high. Just let me pull back up. Broke the previous daily high, retraced further than we expected, gave a long setup. It would have barely just nicked us on a stop. Then we give another long setup, and it runs for that high, hits the level above the previous high of the day. And then day closes. So that is classic setup number 1. Now, classic setup number 3 is essentially with a high extended. This, in my opinion, is similar to classic setup number 3 after it's already given a long. So we give this long in here, say this one. This is still classic setup number 1. But once it pulls above this high, if we still had a lot more time in the day, then we could have looked for another a continuation of that. But this is going to be it for just a quick video on some classic setups. We're going to cover a lot more on these. These are just going to be the first few ones. And again, there's that classic setup number 2 playing out on NASDAQ. All right, guys, we'll catch you in the next video. Hope you're enjoying the tool so far. Let's keep going.